Hello and welcome to the LA Venture Podcast. We're David Waxman and Minnie Ingersoll, partners and investors at TenOneTen.
Today we're here at BAM Ventures with Brian Lee. Hi, Brian.
Hi, how are you?
Good. So this is LA Venture, which implies we're going to talk about venture capital, but I really think of you as like the preeminent entrepreneur in LA, much more so than I think of you as a VC. But I was listening to your interview with, I think she's the dean of the UCLA Law School, and she said, today we have one of our most accomplished and interesting alumni here with us today. So I thought it was a good introduction. Thank you so much for coming on the show.
Well, thank you so much for having me. This is so exciting to be here with you, Minnie, and with you, David. So thank you so much.
Thank you. It's great to see you.
Should we start by talking about BAM Ventures, which is, I know,
let's do
one
that.
arm, or I know you've got sort of the venture arm as well as the incubator, but let's talk about what you do here.
Sure. So BAM Ventures started about 5 years ago. We're now on fund number 2. So we started fund 1 about 5 years ago. A very, very small fund. We wrote very small check sizes into the earliest stages of companies. So entrepreneur with an idea is the stage we like. So really not a lot of diligence there, except for kind of vetting the entrepreneur. And we've gotten pretty good at it. So fund 1 has performed quite nicely, and fund 2 is off to a good start. And so we're very excited about what we're doing at BAM Ventures.
And are those your ideas or the founders' ideas?
No, the founders' ideas. Yeah, so BAM Ventures, we invest in outside companies. Right now, we have something called BAM Labs here as well, where we do kind of incubate and start companies that are my ideas. Right? We
I missed the introduction, which is your ideas, by the way. You have co-founded LegalZoom, ShoeDazzle, and Honest Company. Probably
That's
many
right.
other things as well.
No, those are about it.
Those are the big ones.
Yeah.
Oh, is that all?
Yeah.
Yeah, I love starting companies. I think that's first and foremost. I don't think I'll ever stop because that's just my joy. Is coming up with ideas and kind of getting them started, building teams, getting them traction and launched and so forth. And so I think I'll continue doing that. But at the same time, I love investing too because I love meeting these entrepreneurs with such great ideas, and they're so inspiring in so many ways. And on top of that, I want to give back to this community, right, and grow this ecosystem even further because a growing ecosystem is good for all of us, and we all know that, and that's why I'm even doing this podcast. I mean, I rarely ever do a podcast, as you know, but I really wanted to do this with you guys.
You're so kind. Thank you. But so when you're doing sort of more traditional strong rather than incubating of these ideas, or no, it's not incubating. We'll come back to that. But when you're doing the investing, do you think that you're able to identify great entrepreneurs, great ideas, or do you think a lot of it is also in the support that you can give these ideas or some combination of all of those?
I think it's a combination of a lot of it, although we have really one simple rule at BAM Ventures. It's we have to like the idea, but we have to love the entrepreneur. Basically, that's one of the most simple rules out there. But the other thing is, we only invest in companies that we feel that we could run ourselves.
I love that.
Right. So if we don't have the expertise in that arena or the idea, then we won't invest. So we shy away from a lot.
Yeah.
Because we don't really know that much.
So for entrepreneurs who might want to come to you, what kind of companies fit that?
Well, we're very consumer focused, but we define consumer pretty broadly. We'll do everything from brand, so think apparel, beauty, food, beverage, so any consumer kind of related brands. But then we'll also invest in consumer tech. Right, so anything that touches upon the consumer, and then we'll also invest into SaaS software plays that enable commerce because we're pretty familiar with that arena as well. So it's kind of across the board, but all consumer related.
And on the brand side, does there need to be some tech involved, or would you do
No.
pure CPG?
We'll do pure CPG. Yeah, we have quite a few of those actually.
What is sort of a normal roadmap? Like, will you help someone get onto shelves? Will you help them get into Amazon?
Yeah,
What's
all
a
that.
typical roadmap?
So we do all that. So typical roadmap is entrepreneur will come up with an idea for, let's say, a new beverage, right? And if we love the entrepreneur and like the idea for the beverage, then we will help. We will invest. We will help them raise that seed round. Actually, we're pretty good at that. in terms of passing the bucket and trying to get our friends involved as well. And so once the capital is raised, then we basically come up with some strategic roadmaps with the founder, and getting them on shelves is definitely on that roadmap. And so we have tremendous relationships with a lot of retailers in the space, and with the right buyers and the right teams and the right brokers and everything else. So everything from manufacturing, the product, we have relationships with a lot of manufacturing facilities and 3PLs for fulfillment and so forth. And so we kind of help them all the way through.
Got it. And you said you're writing pretty small checks, and you talk about helping people with their seed rounds. Mm-hmm. Are you a pre-seed fund? And
I mean, it's all commingled now, isn't it?
Yeah. The nomenclature side, like what size checks do you write?
$250,000 to $500,000.
Okay.
Do you think there are a lot of mistakes that people are making in that process, that you see it over and over, and someone's thinking about how they're working with brokers when they should be going direct to the buyers, or are there things like that you help people?
So if we see someone trying to sell on Amazon and they're not doing it right, then we will actually go in there and spend half a day with them and teach them how to sell on Amazon. Right. So, and we do that a lot actually, because Amazon as a whole, it's the wild, wild west.
What are some common mistakes of selling on Amazon?
Well, number one, you should be on FBA, fulfilled by Amazon. You should not try to fulfill this yourself. You should also try to be, fully aware of the value of reviews.
Oh, right.
Right, and understand how to collect those reviews and drive up the 4 and 5 stars. Don't use Vine, right, which is an Amazon product to try to get these reviews, because it doesn't work, and it's a waste of money.
Is it just asking?
I hope Amazon's not listening to this podcast. Maybe I should have said that.
Little mark against Brian Lee's
exactly.
companies.
And so is it like for Amazon? It's what I think it is, which is like every time you do a sale, you ask your customer, leave us feedback, that sort of stuff.
Yeah, absolutely. Yeah. And just driving up those reviews.
Okay, great. And you're pretty LA focused, very LA focused?
We are. I would say on the BAM Venture side, about 60% of our companies are based here in Los Angeles, in Southern California. We also have some investments in Austin, Texas, Chicago, New York is a big city for us. Not a lot of deals in the Bay Area, because most consumer brands are not coming out of that region.
So the consumer brand side of things, so obviously there's a lot going on in LA. There's also a lot of, unprofitable e-commerce nowadays. And how do you think about the importance of building something profitable? Or, we've seen some big exits here that have not been profitable.
Right. I know this is going to sound a little, I don't want to sound flippant, but it all depends on the tide.
Interesting.
Right, it really does. I mean, there are certain periods in time where, growth is everything. And I think as investors, we all kind of see these tides churning. And today, that's not necessarily the case.
Is there a rule of thumb for unit economics on consumer goods?
Rule of thumb for unit economics.
Or margins, however you want to put it.
Yeah, it depends on the actual AOV, right? The actual value of the sale. But overall, the way that I like to look at it is really on an LTV to CAC basis, right? So the lifetime value to cost per acquisition, I like to say is
a net LTV?
A net LTV, not a revenue LTV.
Yeah.
Right? The net LTV. So if you're in the range of, call it 3 to 4x LTV to CAC, it's a pretty healthy ratio. And that's on a blended CAC. So that's including the organic.
Okay. And do you think about time
paid.
in that equation as well, like the payback period?
Yeah, within 1 year.
Within 1 year.
Oh yeah, absolutely within a year. Anytime, and that's the thing. That's where you start getting yourself into trouble as an e-commerce company, is when you start modeling out these 2, 3, 4 year LTVs, and who the hell really knows if that's ever going to happen, right? But 1 year, you could see that. You can see you have some visibility into a 1 year payback, a sub 1 year payback.
And do you think that there are trends that are helping or hurting either the CAC or the costs of the brands you're seeing?
Yeah, absolutely. So it really depends on channels, and channel marketing and what's next. So there are certain periods in time where you will see an explosion of new brands that gain a lot of traction very quickly. And to me, it all relates to the channel, right? So for example, like when I started LegalZoom with my friends Brian Liu and Eddie Hartman and Rob Shapiro, we were one of the earliest advertisers in the world to pay for a click. Not a lot of people know this, but we were I think we were the 8th advertiser in the world to pay for a click. And we really ramped with paid search, right? And once you hit a certain threshold in paid search, I think you all know this, it's too hard for others to come in and compete because you've already A/B tested and got the best flow, the best conversion. You're not going to, if we're paying $8 for this click, no one new in the space is going to come in and outbid us efficiently, right? Unless they're going to go raise, $1 billion to
do it
so.
inefficiently, right?
Exactly. So that was paid search, and then you saw the rise of, call it social media, right? With Facebook, right? And that was ShoeDazzle. That was my second company. We got lucky. We started ShoeDazzle right at the right time when Facebook's first started opening up their marketing channel, right? And we really ramped ShoeDazzle quick on the Facebook channel, and then Instagram, right? And then now you got some other new channels. TikTok looks interesting if it keeps growing. It's not quite at scale yet, but if it hits. So you see these little windows, right? Social media influencers was another thing that kind of happened with The Honest Company. The Honest Company really grew with the bloggers, right? I mean, with these social media influencers. And on top of that, Jessica Alba, of course, right? But it was really the social media influencers that really drove a lot of the traction for Honest Company as well.
How do you figure out when these channels are going to top out? How do you evaluate that early on to see, how much headroom do I have with this channel? You
definitely start seeing your CAC start going up.
Oh, so you have to wait till it starts to hurt.
Oh, yeah, you wait till it hurts. That's a really good way to put it, actually. You wait, you track it, you wait till it hurts, and then you say, okay, it's not working anymore.
And do you think that brands need to be multi-channel, or can they just be on one channel? And when do they expand to multi-channel? How do you think about that?
I've really changed my position on this, by the way, over the years. There was a period with even The Honest Company where I was adamantly against Amazon. Right? I was like, no, we're going to control our own channel. We're going to go direct to the consumer. We control the data. We control that customer. And I was a fervent believer in that. I'm not anymore. I'm definitely more of the omni-channel, omnipresence approach to brand building. Because for me, at the end of the day, what matters is that you get products into people's homes and their hands. And, yes, a lot of people shop online, but still 80% still go to a retail store, a grocery store, or wherever they're shopping. And I just kind of want to be where they are. That's number one. But number two is also that in the last, I'll call it 5 to 7 years, I would say, Amazon has reached a point where you can't compete without them, or you can't compete against them per se. You want to kind of play with them. Right, it's crossed over this threshold. Right, I don't know a single friend who is not an Amazon Prime member. I just don't. I don't know why that is, but everyone I know is an Amazon Prime member. Yeah. Right, and that's where they shop. Yeah, depends on the category as well.
Yeah, I would imagine luxury, the higher end it is, the less you need Amazon.
Absolutely, the less you would need Amazon.
But for the Honest Company, so you ended up deciding you would sell on Amazon.
Right.
And do you have a way of thinking about how to then leverage Amazon? Like how big, if you can share, how big of a channel is Amazon then? And then how do you still maintain the brand and the user connection that you wanted to keep?
I don't think you can keep the user connection.
Okay.
So and it's not that you give up. It's that you want a strong enough channel that you control to get enough data from that. Right, and enough resonance with the user base, because even when you're going to Target and you're going to offline, it's the same issue, right? I don't have the type of data that I have from a Target shopper, right? So it's the same thing. Amazon is simply another retailer in that sense.
Yeah, except they could give you the data.
They
whereas
could, but
Target
they
probably
don't.
couldn't. That's right.
They're giving you less and less. But by the way, Amazon actually used to give you a little bit more information, and now it's like slowly every year they're giving you just less. I'm not sure if you knew that, but yeah.
I didn't know that.
No, neither did I.
How about with influencers as a channel, if you will?
I think influencers are number one, they're here to stay. And number two, they're growing in strength and popularity. I think influencers are always a good thing. You don't want to overpay. Again, you want to make sure that you're not paying more than what you could afford on a CAC to LTV basis. But at the same time, I think they're incredibly important to any brand to have that many people talking about you and to raise awareness.
And how do you get to them these days? Is it direct contact, or they all have intermediaries like agents?
The biggest ones have agents, but there's a lot of influencers that you could just reach out to directly. It takes a lot of hustle, a lot of hard work. But yeah, you could definitely reach out to them directly.
So maybe it's a good transition actually to talk more about BAM Labs.
Sure.
Which I think at the top of the show, maybe I called, you're incubating things, but I think you've called it a production studio.
It is. It's a production studio.
Which I love because it makes me think of sort of Hollywood production where you're bringing all the pieces together. But tell me a little bit about the model here, and then maybe we can also talk about the influencers or really celebrities that you are currently working with.
Yeah. So BAM Labs, it was a concept that I've always had that I wanted to do. And so basically I'll come up with an idea, the vision, a strategy, and kind of build a team that I know can execute that idea and then supply capital. I stay on as chairman. I help CEO and founder get the company launched, get it traction, get it going, and then I'll roll off at some point. So that's kind of the model. It's not an incubator. It's not necessarily like, it's not an accelerator. We don't have shared resources. We're literally launching companies like fully, with full teams and so forth. So it's just like any other startup. It's just, the only common thread is me as chairman.
Right. But an incubator, you'd have a finance person who spanned 4 different companies.
Right. No, we don't have that. Yeah.
Let's talk about what you've got going on here right now. I know you've moved into a bigger office because I believe one of the companies that's part of BAM Labs is expanding. That's Art of Sport, right? And you're working with Kobe Bryant on that.
Yeah. So Art of Sport has been a really fun one. It's a consumer brand, high performance body care products for athletes and those that live an active lifestyle. Matthias Metternich is the CEO and co-founder, and he's absolutely terrific and love him to death. He's doing an amazing job growing this business. I was looking for sunscreen of all things, and I walked over to a CVS. I was looking at the sunscreen, and sunscreen on a mass level is dominated by 3 brands. It's Coppertone, Banana Boat, and Neutrogena. These are the 3 big brands. But interestingly, the number 1 SKU for each one of them says sport on it. Okay. And the sport is in bigger font than the actual brand logo. Right. So to me, I was like thinking to myself, like, am I buying sport or am I buying Banana Boat? Right. What am I buying? And so it was just interesting to me. So I walked around the corner. I was looking at the deodorants, and it was kind of the same thing. About 30 to 40% of the deodorants were sport related. They either had sport terminology, something like Sport Blast, or something like that, along those lines, or even or something like called like Extreme something with a guy on a bicycle, like whatever it was. And I was like, that's interesting too.
Couch potato deodorant.
Yeah. And then I walked to in the body wash section. Even in that section, there was like Axe Sport Blast and Old Spice Sport, whatever it was. And so for me, I was just thinking to myself, like, when I think sport and I think, athletes and active lifestyle, I actually think Nike, right? I think Adidas and Under Armour in the wearable categories. And even in the consumable category, I think Gatorade. I think Powerade or Cliff Bars or Power Bars, right? But when it came to personal care, which is a huge category, I just looked at them as all pretenders. None of them were started for sport.
That's very interesting.
Like Old Spice was started in 1926, I think, or 28, and now they're a sport brand.
See, all
It
those
made
other
no
CVS
sense.
shoppers didn't realize. They
Oh, I
just saw
know.
a dude shopping.
Don't
They
you
didn't
want-
realize that there was the genesis of a company.
Yeah.
Don't you want to go to CVS with Brian?
Absolutely. Or any other store.
Yeah.
No, so that was the genesis of Art of Sport was you know what? Why don't we create an actual authentic brand for athletes from the get-go? And so that was Art of Sport, and we started with Kobe Bryant and James Harden, Juju Smith, Javier Baez in baseball, Ryan Sheckler in skateboarding. It's been terrific.
And what role do those athletes / celebrities play usually when I don't want to lessen Matthias's role, but like what role do the celebrities bring? Are they just bringing the distribution and the sort of visibility, or are they actually influencing the product and the company?
Kobe's definitely influencing it. So Kobe helps us create the scent profiles as well as naming the actual products themselves. So we're in constant strategy discussions with Kobe. The other athletes are involved. They will definitely give us their opinions. But then also all of them are helping promote the brand.
This is an interesting case study for our listeners. So you have this idea, you've put together a team. What's next, and sort of what's your roadmap for the next 6 months?
For Art of Sport, the roadmap is basically we're going to continue selling on Amazon, which we're doing now. We're going to start focusing more on our own direct-to-consumer channel, which we haven't done so recently. So we're going to focus on that as well as offline retail.
Minnie and I were talking about this before our show today. It feels to us software investors like you might not be able to iterate as well for a consumer packaged good. Is that true, or are you iterating the product as you're out there on Amazon?
We're definitely iterating. It's constant. It's constant. I mean, there's a reason why you walk into a store and a CPG brand will have new and improved on their packaging, right? Number one, it helps sell the product even further, but it also is these companies are constantly iterating and coming up with better products and formulations and so forth.
And how do you know to make it new and improved?
Well, the new improved is definitely you're trying to get as much feedback as you can from your own customers, right? So you're like I said, you're not going to get that much data from the offline shopper. But in terms of velocity of sales, and I mean you get these reports every month from the retailers that you're in, and it actually shows the benchmarks that you're trying to hit and so forth. And it's really interesting when offline retailers will look at the margin profile of the product versus velocity as well, right? So if you're selling laundry detergent, let's say, right? If you're Tide, you're selling a lot of Tide, right? But the margins are not that high. But if you're selling an all natural organic laundry detergent, the margins that offline retailers making is higher, so the velocity they would expect to be lower. It all kind of works out at the end, and so long as you're in this band that they're looking for, then you're fine. If you're outside of that band on the low end, then you're going to have to drop your price and start doing some other testing, couponing, whatever it takes to stay in store.
Very cool. I have some Art of Sport at home, but then I haven't been at all sporty lately. And I was like, I have some lotion, I believe.
Nice.
Yeah.
I was going to say, your skin looks great.
How much does it take, like, money or time to get a product, an idea to its first, few channels, or its first channel, or its first customers?
Again, it depends on the product.
How about a beverage?
A beverage? Beverages aren't that much, truthfully, because you could find some pretty good OEM manufacturers that could do small batch runs. Can you start a beverage company for $100,000, $200,000? Probably. You're not going to get much, right? And you can just have to kind of hustle. Because I know that GT Dave Kombucha, he started with almost nothing.
Yeah.
Like literally making the stuff in his garage.
Yeah.
So you could definitely any company can get started with almost nothing if you put enough.
Elbow grease.
Yeah, if you put enough willpower into it.
I think you also said something that really stuck with me. I heard it a while ago where you said you almost might as well go for something that will scale, because it's as much effort to get a non-scalable, I forget what your example was. Was it frozen yogurt?
It was frozen yogurt.
There you go.
Wow, you're good.
Yeah, that was a while ago. But you had a frozen yogurt store, did you not?
I did.
There
I
you go.
did. I had a frozen yogurt store called Cantaloupe Frozen Yogurt, and it's still around, believe it or not. It's on Hollywood and La Brea. Right
Was
here
it
in
part of a
Hollywood.
chain?
No.
it was-
We just opened it ourselves because that was when the LegalZoom office was across the street.
That's awesome.
And this is when Pinkberry was really hot, and this little location opened up. So I called Pinkberry, and I said, you know what? I think you should open a Pinkberry on this corner, selfishly, right?
Yeah.
And they said, no, we're not interested in that location. So I'm like, fine, I'll just build my own. And so I opened this Pinkberry frozen yogurt, and it was like one of the worst business mistakes I ever made. It's so hard. It's so hard to run a frozen yogurt shop, and I had no idea that it took that much effort and energy. And it was like every month I was just losing money, right? The management that we had in place was poor. Truthfully, the employee base wasn't that great. The product needed work. Everything was like so much effort, and that's when I realized it's like, man, I'm putting in just as much effort into building Cantaloupe frozen yogurt as I am LegalZoom.com.
Yeah.
Right? It's like I might as well put my energy into LegalZoom.com.
It's a good decision. Do you have other funds that often tend to co-invest with, or I know Lightspeed is a partner of some form for you?
Yeah, so we're Lightspeed is our partner in BAM Labs. Jeremy Liu has been my partner for a very long time, and I love him to death. Truthfully, great partner. In terms of other venture firms that we work with here, we work with a lot of them, almost all of them. I think especially at the stage that we invest in, it's very friendly, and that's why I like it actually.
Us too.
It's like I said, you pass a bucket and you share deals and you talk about deals with friends. And
Any other advice for entrepreneurs that we should really make sure we touch on? Entrepreneurs who are approaching BAM perhaps and want to get to know you better and how they should do that?
yeah, for us, it's pretty easy. Just reach out to us, Brian at bam.vc.
Great.
I'll throw it out there.
Awesome.
All right.
Yeah.
Awesome. Thanks so much.
Thank you.
Thanks so much.
Thank you, David. Thank you, Minnie.
Wow, we totally missed congratulating Brian on Honey's $4 billion exit, where BAM was a seed investor. So congrats to Honey and BAM, and please give Brian a big thumbs up if you see him, because this is, of course, huge for the LA ecosystem.